Welcome. In this video, can Zbcn coin increase by 330%? We will analyze this. Don't forget to subscribe, like, and please watch to the end to understand.
In the chart structure we are analyzing, we observe that price action is approaching a particularly noteworthy level, especially as the price pulls back to a zone that previously saw strong buying reactions. It offers significant clues from a technical analysis perspective. This area is a strategic zone where high-volume buy orders were previously triggered, causing sharp upward movements in price. These types of zones are referred to in the literature as bullish order blocks. Bullish order blocks leave a notable footprint on the market, particularly because they are where large investors and institutional traders enter positions. When the price revisits these zones, the likelihood of a similar reaction occurring again is quite high. Such structures are valuable not only when looking at past price movements, but also in understanding current market psychology. These blocks are seen as areas of fair value by investors, where opportunities exist in the price. When the price revisits these levels, investors who missed the earlier opportunity may step in, increasing buying pressure and potentially pushing the price back upward. Moreover, not just retail traders, but also larger players who see that the price is finding support in this zone may be more inclined to participate, further fueling the momentum. Another important point is how the price approaches these bullish order blocks. If the price returns to this zone due to oversold conditions or panic selling triggered by negative news, the reaction can be even stronger. Oversold conditions often mean the price has dropped below its fair value in the short term. This provides a buying opportunity for smart investors, and the order block becomes a strategic area where that opportunity aligns. The behavior of price in this area plays a decisive role not only for short-term trades, but also for medium to long-term investors in determining direction. If the price manages to stay above this bullish order block level, it forms a technically strong support. This support zone then acts as an area where buy orders lie in wait should the price revisit it. This builds investor confidence. It is well known that zones with historically strong buying reactions leave a positive impression and can serve as catalysts for new waves of buying. Bullish order blocks also provide forward-looking insights into the potential direction of price. Strong reactions from these zones often signal trend continuation, especially if price tests the area and then begins moving upward with increasing volume. It shows that buyers are entering the market with conviction and that confidence is being restored. In such scenarios, when fundamental data also begins to support the structure, a much stronger upward trend can emerge. Therefore, the price reaching a bullish order block should not be viewed solely as a backward-looking technical signal, but also as a sign of investor psychology and institutional capital flow. Furthermore, confirming these blocks across different time frames is crucial. Seeing these blocks not only on the 4-hour charts, but also on daily and weekly charts increases the strength of the signal. Such time frame synchronizations help us better understand why the price reacts when it reaches a particular area. If the bullish order block was previously a resistance zone and now acts as support, it indicates a reversal has occurred and that price is committed to moving higher. On the other hand, it's important to consider not just the technical structure at these levels, but also volume analysis. How volume behaves when price returns to this zone shows how seriously investors take the level. If volume is low, the zone is at risk of being broken. However, if volume is high and shows upward momentum, it suggests that buyers are in control and that the price may reverse from this level to the upside. Another key factor is that these blocks often form liquidity pools. Many traders place stop losses around these levels, so large players may push the price down to this zone to buy at lower prices. However, a strong reaction in price at this point indicates that there isn't enough selling pressure below and that buyers are dominating. In such a case, investor confidence grows and the upward move can accelerate. Additionally, bullish order block levels are not just significant for technical traders, but also for algorithmic trading bots. Many automated trading systems are programmed to enter positions at these levels. This helps explain why price may suddenly reverse when it reaches these zones. If the price reaches this level, consolidates for a while, and then breaks upward, it shows that a technical decision point has been reached. These decision points often result in major directional moves, making these levels not only key observation points, but also critical for position management. Finally, these zones offer not just entry opportunities for investors, but also advantages in risk management. Opening positions near key support levels like bullish order blocks creates an ideal scenario for placing stop-loss orders just below the block. This offers the potential for greater returns with smaller risk. From a risk-to-reward perspective, such setups are very attractive. For example, a long position taken from this level can generate significantly higher profit if price reaches the next resistance zone, while the loss risk is minimized. So in conclusion, the bullish order block level the price is currently approaching is significant not just because of the strong buyer reaction seen in the past, but also in terms of technical analysis principles, market psychology, volume behavior, and algorithmic strategies. The way price reacts to this zone can shape the direction of the trend and investor sentiment going forward.
I'm interrupting the video for a moment, friends, because Bitunix Exchange has a great campaign. Here's how it works. After registering on the exchange via the link in the description and completing KYC, if you deposit $100 for your first deposit, you will receive a $20 bonus. If you deposit $500, you will receive a $100 bonus, and if you deposit $1,000, you will receive a $200 bonus. I think this is an excellent opportunity for leverage trading. For more details, you can read the articles below. The link is in the description.
MACD, or the Moving Average Convergence Divergence Indicator, is an extremely powerful and frequently used technical analysis tool that helps investors understand trend direction, momentum, and potential reversal points. One of the most notable developments in the current market structure is the MACD lines crossing above the zero level into positive territory. This is not only a technically bullish signal, but also sheds light on the emotional state of market participants. When MACD moves above the zero line, it often indicates that long-term momentum is shifting to the upside and that the market's potential to initiate an upward trend is gaining strength. The MACD indicator consists of two moving averages, one shorter term that reacts more quickly and one longer term that reacts more slowly. The difference between these two averages forms the MACD line, and the average of this difference is called the signal line. Crossovers between these lines generate buy and sell signals. However, one of the strongest signals produced by this indicator is when the MACD line crosses above the zero level. This indicates that short-term momentum has broken above the long-term trend and that a change in market direction is underway. In the current technical outlook, the fact that MACD has moved above the zero line is a highly critical development. This upward move may signal that investors are starting to take positions with growing confidence and that the market is entering a strong bullish momentum phase. In such cases, when the distance between the MACD lines starts to widen, meaning the histogram bars above the zero line continue expanding in the positive region, it suggests that momentum is strengthening and that the bullish trend is gaining traction. MACD's movement above the zero line is especially significant in longer-term trends. The zero level is technically the most neutral point of the trend. A move above this level confirms that buyers are now in control and that bears are losing strength. The longer MACD remains in positive territory, the greater the confidence in upward price movement becomes. This indicates to technical traders that bullish strategies should be prioritized. Another important element to watch is the MACD histogram. When the histogram bars above the zero line grow larger, it shows that momentum is strengthening and that buying pressure is intensifying. This type of structure often suggests that the upward move is still in its early stages. In other words, current price levels could be the first steps of a rally that may reach much higher points over the long term. In this case, investors who time their entries well could significantly increase their potential profits. The MACD's ability to remain above the zero line is another key indicator. Sometimes MACD may temporarily move above zero, but fail to hold and quickly fall back below. However, in the current technical setup, MACD has not only crossed above this level, but is also maintaining its position in the positive region. This is a very strong signal indicating that the momentum has a sustainable structure and that buyer interest in the market remains. Such sustained momentum allows investors to build stronger and more secure positions.
Additionally, when examining past price action and MACD analysis, it is observed that MACD movements above the zero line often result in significant price increases. This pattern is frequently seen at the beginning of major rallies. Current technical data also supports this possibility. In this context, the MACD's upward movement in positive territory is not only important from a technical analysis standpoint, but also a highly valuable indicator of market psychology. In short, the MACD indicator crossing above the zero line is a very strong and reliable signal indicating that the market is now in an upward trend. As histogram bars continue to grow and the gap between the MACD and signal lines widens, this could signal the beginning of sharp and sustained price increases. In technical analysis, it is just as important to understand the strength of a trend as it is to identify its direction. The current state of the MACD not only indicates the presence of a trend, but also shows that the trend is strong and likely to gain even more strength. When such a signal appears, investors should reevaluate their strategies accordingly and ensure a proper risk-reward balance. MACD entering positive territory, when combined with proper timing, can create significant profit opportunities. Therefore, investors should pay close attention to not only price, but also to the technical indicators that support it, and not ignore these strong signals as they play a critical role in strategic success. Especially when such positive signals are confirmed across multiple timeframes, investment opportunities are based on a more solid foundation and provide safer entry points for investors.
According to the technical analysis data we have, a clearly defined cup formation is evident on the chart. This formation typically reflects a recovery process following a prolonged period of decline or sideways movement and sets the stage for upward price movement as investor interest gradually increases. The cup structure in question shows that after forming a deep bottom, the price has gradually recovered over time and has finally reached the starting level of the formation. In technical analysis, cup formations generate more meaningful signals when observed on long-term charts, as these structures often precede strong buying waves. The completion of this cup formation, meaning the price has returned to the initial level of the cup, indicates that buying pressure in the market has increased and that investors have entered a psychologically positive zone. During such periods, to estimate the potential upward movement, the depth of the cup is used as a basis for calculating the formation's target. When measuring this depth, technical analysis metrics indicate that if this formation completes successfully, the price may have an upside potential of approximately 330%. This represents a significantly higher target from the current level and tends to generate excitement among investors. However, no matter how promising technical analysis signals may be, there is never certainty in financial markets. Therefore, such projections should always be considered within the realm of probability. While chart patterns, formations, and indicators provide a roadmap, it's essential to remember that markets are influenced by numerous variables. So, even though the cup formation appears technically complete and ready to move toward the target, achieving this goal requires sustained positive news flow, volume, and investor interest. Price breaking out of a cup formation to the upside often triggers strong buying activity. This is especially true when such formations occur in projects that have earned investor trust, potentially leading to even stronger price action. These structures generally do not go unnoticed by medium or long-term investors and may attract larger positions from institutional or individual investors over time. If the price closes above the technical target, it could signal the beginning of a new uptrend. The reliability of this technical setup is further reinforced if the breakout from the cup formation is accompanied by a volume increase. That's because it's not just important for price to break technical levels, it also needs to be supported by strong volume. Otherwise, false breakouts may occur, potentially misleading investors. However, if the chart we have shows that the cup formation is both visually complete and backed by volume, it may indicate a strong price movement toward the target. Still, caution is necessary when anticipating such upward moves. Like any pattern, the cup formation doesn't always result in the expected movement. Macroeconomic developments, regulatory news, large investor sell-offs, or unexpected news events can cause sudden price reversals. Therefore, before investing, it's important to consider not only technical patterns but also fundamental analysis data and the overall roadmap of the project. On the other hand, reaching the initial target after a cup formation can often create new opportunities for long-term investors. That's because a successful breakout builds confidence in the market, which can lead to a chain reaction of buying.
Although a 330% target may sound like a significant opportunity, reaching that target may take time, and investors may need to patiently follow the process. Especially in long-term formations, the path to the target is rarely a straight line. There may be corrections, profit-taking, and retests along the way. Investments should be made with the understanding that all these scenarios are possible. It's essential for investors to carefully assess risk-to-reward ratios when evaluating these types of chart patterns. Even if a formation's target appears high, the risks taken to reach that target and how much capital is allocated to the position are factors that directly affect success. Therefore, investors must prepare not only for potential gains, but also for potential losses. Investments made without setting stop-loss levels always carry greater risk. Additionally, large formations like this require investors to consider market psychology. These patterns often develop around shared expectations among market participants. If a large portion of investors is aware of the formation and takes positions accordingly, prices may move in line with those expectations. In contrast, if the pattern is still under the radar, price movements could be more volatile. Therefore, monitoring overall market sentiment is also important. In conclusion, the chart and technical structure we have present highly promising signals. The completed cup formation suggests that the price has broken a significant technical level and may see stronger upward movements in the coming period. While a 330% potential increase is undoubtedly an eye-catching target, it's important to remember that both technical and fundamental supporting factors must align for this process to succeed. As with any investment decision, the final judgment depends on the investor's own risk appetite and analytical ability. In other words, while evaluating this formation, one must proceed with caution, remain aware of the probabilities, and base the final assessment on individual risk perception.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.